You ever notice how investing tips always sound the same? Be patient, stay consistent, think long term. It's like everyone's just repeating the same thing over and over. But here's the truth. There's a reason for that. Investing isn't about chasing the next big stock or constantly switching strategies. It's about sticking to what works and doing it again and again, even when it feels boring. Actually, that's what works. Boring is better in investing, but that's the hardest part. So today, let's talk about why discipline is everything in investing and why the real challenge isn't finding a strategy, it's sticking to it. One of the biggest mistakes investors make is constantly searching for the perfect strategy, like there's some secret formula that will instantly make them as rich as Warren Buffett or that trader who made millions in a single trade. They jump from trend to trend, causing their money to shrink instead of grow. This happens because they don't see results fast enough and the process feels too slow. This is especially true today because social media is filled with traders showing off their million-dollar wins, but in reality, they only show their successes. They never give you a transparent view of their entire portfolio or long-term performance. This creates the illusion that they found a secret formula and that whatever you're doing is wrong. It traps people in a cycle of constantly searching for a new approach, a new strategy. Let's break that misconception. The investors who truly outperform the market, the ones who are actually transparent, don't have flashy, exciting strategies. Look at Warren Buffett. He openly shares his investing moves in his annual letters. His strategy? It's unexciting, boring to most, but that's exactly why it works. The truth is, the secret formula is already in front of us, but we fail to accept reality. What works is simple, and what's simple isn't easy to do, especially with social media constantly feeding us the idea that investing should be fast and exciting. Consistency and discipline are on a whole different level of difficulty. Sticking to a strategy that feels slow in the beginning is incredibly tough. Take Warren Buffett's wealth for example. The majority of his fortune came after the age of 50, but the media doesn't highlight this because it's not exciting. His strategy can be summarized in just a few sentences. Invest in strong companies at a fair price, reinvest every dividend and capital gain, live frugally so you can invest more, and do it for a long time. Then repeat the cycle over and over again. That's not the kind of headline that gets clicks, but it's the truth. This is why my videos repeat the same lessons over and over again, because investing doesn't constantly change. That's also why making this exciting is so difficult. My investing strategy is just a cycle of doing the same thing every single year. The only real new thing is when I invest in a different company. The hardest part of this strategy is always at the beginning, because that's when you don't feel any real growth. In my portfolio, for example, at the start of my investing journey, I was getting less than 1,000 pesos in dividends for the whole year. Now, years later, I'm receiving 15,000 per month. And because I reinvest everything, if I just keep repeating this process for years without touching it, my portfolio will eventually grow to more than 50 million just by doing the same thing over and over. No fancy moves, no exciting trades, just pure dividends. We can learn a lot from how the stock market index works. If you simply left $10,000 in the index, reinvested every dividend, and didn't touch it for 63 years, you'd end up with 5.1 million. Even if you didn't reinvest the dividends and only relied on capital gains, you'd still have 796,000. This chart alone proves how discipline and compounding grow wealth. No complex trading, no constant strategy changes, just consistency. So why isn't everyone rich? Well, a lot of people have become rich just by consistently investing in the index or just sticking to just buying and holding great companies for a long period. But for the majority, they weren't disciplined enough to let their money compound for decades. They got impatient in the early years and gambled their money away, still stuck in the cycle of chasing the next big thing. The truth is, if you want to win in investing, forget about shortcuts. Find a strategy that works and stick with it. Keep pressing that repeat button, because in the end, the secret to wealth isn't exciting, it's just discipline. So what should you focus on instead? Well, focus on the strategy that has made countless multi-millionaires. And that's exactly what I've been emphasizing in this video, long-term investing. No matter what era you're in, it has consistently shown a higher chance of success compared to trading. Second, adopt a long-term strategy that has stood the test of time, like value investing, dividend investing, or simply sticking to index investing. These approaches have been studied and refined by legendary investors, and you can learn about them from the countless books and videos they've left behind. The strategy is simple: find great companies, buy them at a fair price, reinvest every dividend and capital gain, and repeat for years to let compounding work its magic. Here in the Philippines, I've incorporated a value dividend investing approach. I consistently invest in companies with strong historical earnings growth, solid dividend payouts, and fair valuations. I've been doing this for 5 years now, and it has worked well for me. So far, my compounded annual return is 9.93%, while the index has had negative returns in the same period. And on top of that, I receive consistent dividends while waiting for the market to recover. How great is that? This lets me stick to my strategy even more, as I'm getting consistent rewards through dividends as I wait. This is value investing in action, the same principles followed by Warren Buffett, Charlie Munger, Peter Lynch, and other successful investors, but with a focus on value dividend companies. You see, the Philippine market tends to move sideways for long periods, but that doesn't mean your portfolio won't grow. Thanks to dividends, even if I stop adding money to my portfolio today, I'm well on my way to surpassing 20 million, earning 1.7 million a year passively, all from reinvesting, rinse, and repeat. It may not be exciting, but understanding how compounding works has helped me stay disciplined and stick to this strategy. By the way, if you want to follow my strategy and see the exact stocks I'm investing in, you can easily do so with DRAGONFI. It's a Philippine broker packed with tools and research to help you invest smarter. One of its best features is a signature portfolio, which includes my very own InvestingPH portfolio. You'll see all the stocks I own, their respective buy prices, and even a separate panel showing which stocks are currently trading below their buy prices. How great is that? And if you want even more options, you can also check out the portfolios of other creators and the DRAGONFI team. So if you're interested, use my link below to sign up, and we can both get up to 1,500 depending on your initial funding. Thanks for the support. Now back to the video. Another key focus should be improving your financial education. Learn how to budget well, refine your ability to identify good companies, and build a strong foundation in personal finance. The best thing about a strategy that doesn't demand too much time is that it frees you up for other things. So don't just limit yourself to investing books, read general finance books too, because they will help reinforce the mindset and discipline you need to stay committed. And if you want to focus on your physical and mental wealth, then you can add more of these activities to your life, as this strategy does not demand much of your time. And for me, one of the most important factors is choosing the right life partner. Let's be real, finances play a huge role in relationships. If you're not one of those exceptional individuals who built a successful business or landed a high-paying job early in life, your choice of partner matters a lot. Having financial baggage, or worse, a partner who constantly spends beyond their means, can be a major setback. We've seen this happen to even the most successful artists and business people. If your goal is financial freedom, but your partner's mindset is the exact opposite, you're going to struggle. Even if you are a very frugal person, if your partner constantly tempts you to spend like there's no tomorrow, chances are you will cave in, and it will slow down your compounding machine. Remember, the more you invest, the faster you reach financial freedom. Two heads are better than one. If you're both working toward the same goal of retiring early, combining your incomes can get you there even faster. So don't overthink it. The key to successful investing isn't about constantly changing your approach or chasing the next big thing. It's about having the patience and discipline to stick to a proven strategy and sticking with it for the long haul. It might feel boring at times, like you're not doing enough, but in investing, less is actually more. Doing the same simple steps month after month has worked for successful investors for decades. So if you found this video helpful, I'd appreciate it if you click the like button before you leave. Thanks for watching, and see you in the next video.